Hello everyone, this is Rick Ratchford, and what I wanted to do today is take an opportunity to take a look at one of the currency markets. That would be the Australian dollar, because I recently posted an analysis of the Australian dollar, and I thought I'd go over that market and use this as an opportunity to share with you some of the analytical techniques that I use every day when looking at the markets to make some sort of a forecast or prediction, if you may. Now I'm pulling up the Provisions charting software here. This is my main charting tool that I use. Basically, it's the only charting tool that I use. And you can see that it comes up here, and we're looking at the Australian dollar, and it is set for the daily prices. And it came up this way because it was the last market that I was looking at the last time I had closed this program down. Now, what I have are some presets so that I don't have to manually, every time I load this program, put up certain indicators and so forth. So to just make it easy for me every time that I bring up a chart to just apply the indicators I use the most, I have it all programmed. And what I'm going to do is I'm going to pull up the presets by just pressing the F10 key. And you can see I have a couple of things here. I have one that I've named the DMS MACD Seasonals, and another one I call Stock Mac. These are just hints to me to let me know what I can expect by opening them. And I'm just going to go ahead and open the top one here. That's the one I use the most. And you can see that automatically it starts to populate my chart with certain tools that I use. One would be the F-date indicators right here, the seasonal data report that you see over here. Also, I have the DMS and the MACD. Now, in my program here, the way it comes up, it puts the DMS on top. I like the MACD on top, so I'm going to left click and drag that up. There we go. Now, as I'm recording this, things tend to move a little slower, so there we go. I'm not actually able to see the dragging happen, but hopefully maybe it shows up in the video itself for your benefit. But I prefer the MACD on top for reasons that I'll demonstrate shortly. One of the indicators that I also like to use that is not currently showing here, I didn't program it in my preset, is the OBOS. So I'll just press the O key and there they pop up. Okay, now let's get started here. Now the other day, I believe it was 2 days ago, I mentioned that, and that I'm highlighting the bar to represent 2 days ago, I mentioned that the next day historically has a high probability of making a lower low. Well, how did I come up with that conclusion? If you look at the seasonal data report that I have right here, notice that for 5/24, it has this really bright red 71 in here. That 71 is just a high number, and it highlighted it. And it shows it to be a day that was likely to make a new high low. Well, in this case, because it's red, I'm looking for a new low. Blue would be a new high. And so I can anticipate that this has a high probability of making a new lower low as compared to 523. So I expected 524 had a good 3 out of 4 chance of making a lower low than what it did on 523. We see here today, now today is 525. This price bar represents yesterday because this is not a real-time chart. This is an end-of-day chart. That means I don't have the market's currently trading right now, so I don't have that showing here. Though I'm going to show you how I get around that when I want to analyze the market during the trading day as opposed to waiting until the end of day, which is what this normally is used for. But you can see that yesterday, sure enough, the Australian dollar made a lower low than the previous day. Now, that kind of information alone for someone who's a day trader is very powerful. And I'll explain why. Because if you got into the Australian dollar looking at the minute charts, and it opened within the range of 523, and you were expecting that prices would likely break below the low of 523, well, you would definitely be looking for shorting positions here that you could play in anticipation that prices would indeed go lower than it did the day before, and that can make you some really quick little profits there just off that little bit of information alone. The seasonal data report by itself is worth a lot. I was once contacted by a software dealer, I guess. They had a seasonal trading program. They offered it for $1,500, I believe the price was. And it was based on seasonal information. And here you have it for free within your provisions charting application. Save yourself $1,500. This gives you plenty of information as to the historical tendency of the market. And for premium members, you have access to this program at no cost. Now, there you go. That's a little profit information for you there, but let's go a little further. I also have here, you can see I have 3 moving averages here. I call these the 3 fib MAs. It's just the name I gave it. And by hitting the U key on the keyboard, it brings up my moving averages, and you can see that I have here, see this button, 3 fib MA? This is a preset where I can click this and this will come up on any of my charts, so I don't have to keep programming this. And it includes the 8-day, 13-day, and 21-day exponential moving averages. And I use these a lot. These are Fibonacci numbers. That's why I came up with this. I thought it'd be a good idea to try it out, and it works great, so I keep it. And I'm going to go ahead and close this. But you'll notice here that as it's curling up, it acts as support here. And right now, it looks like the 13-day acted as support for yesterday's drop. So again, going back as a day trader, for example, how you would use this is that you would expect the market to go below the low of 523 during the day of 524 you're trading, and you would look at this level right here as a possible support level, so that you might start to pull back on your shorts as you come through here, and then you can get more aggressive if it happens to break below all 3 and start trading below it. Then it becomes resistance as opposed to support. So the support held. Now, another thing here is you can see we have the 3 F dates here. We'll just go through this real quick. I like to see how things worked out. You can see this F date right here. What did it do? Well, if you'll notice, prices had been moving up, making higher highs all the way up to here. Then you can see that prices pulled back to make lower low. In other words, went from this high to making this lower low here, which is a correction or pullback. And then from here, which is in oversold territory, by the way, which you want to always keep your eyes on all the things you've got going, it found its support somewhere in oversold territory and then started continuing back up again. And that happened right here at this F date. So this happened as expected. Prices moved down into the F date. You would start looking bullish because of the fact it was in oversold territory, and because look where it closed. It closed right where it opened and back up inside of the support lines, and then it moved up again. Then you come to the next F date, and you'll notice that it made a top in overbought territory and corrected. We knew this was likely going to happen, as I had analyzed in advance, because of the seasonal data report that I had mentioned. So that in itself also confirmed that we were going to have some kind of a correction, and sure enough, the F date came through again, and that worked out great. Now I'm expecting another correction over here for the May 26th F date, but we're still a little early. This is only May 24th that we're showing here. What about what's happening here today in May 25th? Well, the market hasn't closed yet, so I don't have a price bar for this. I haven't downloaded today's data, but I'm going to show you a nice little trick. Okay, so in my browser here, I just brought up this free charts here called TFC charts, and I selected the Australian dollar, and you can see what's the current day. Now this is going to be like 10 minutes. It says here it's 10 minutes off, so you certainly wouldn't day trade on this information. But what I like to do is I left click right at the very beginning there, and I'll highlight the price from open to last, and then I'll right click and select copy. So now I've copied these prices in. Make sure you have the correct front month. You look at your F date report, which will then show you which one you should be looking at. And I believe that the F dates that we're looking at here is June. Okay, so now what do I do with this copied information? Well, back here in provisions charting, I'm going to come right up to the what if toolbar right here, and I'm going to click that. And it populates the last data that you had here for this bar. Come up to this empty space right here between the title and bar values, just right here, and double click with your left mouse button. And you'll see that it just got populated with the prices I had in the clipboard. Now this is not in the instruction manual. You only know this by actually having watched this video. It's one thing that I added just to kind of make things convenient for me, and I never will know whether TFC will always be there or if they'll make changes, so use this while it's available. Then you want to click Display Bar Update, and you can see that it put in today's price bar so far because the market hasn't closed yet. And then I'm going to store the session so that I can get out of here, move the chart, do whatever, go to a different chart and come back, and it will still be here. And that's the important thing about storing. Well, we can see what's happened here is we've had a swing top occur for this F date. It went lower. We knew that was going to happen. And then prices then rallied up, even though it's a bearish day. It's a red bar, so it's a bearish day. We can see, though, that it made a higher high, making this a DSP. So far, this is a correction, which is no surprise because it found support, and then it rallied back up into OB. Now, currently, the high here, 75.13, is one tick below this 75.14, and then it's retracted all the way down here. So it looks like that's held. And so we're still looking at this as a target for a pullback down to this F date here for a bottom. But what I wanted to show you here, for example, is if you'll look over in your seasonal, you'll see that we were expecting that lower low for here. And then we were expecting this to be a more bullish day, not by a whole lot, because 53 is 50-50 chance, is basically what that is. But you'll notice that it had gone up and made a higher high than that previous day first. Okay, so we knew that this was more bullish than this day, being blue, being red. Now, on some years, these will invert, where this will act like a blue and this will act like a red. So you need to look at what's happened up to that point to get an idea if things are in lockstep or if they're inverted. Usually, I don't pay a whole lot of attention to the ups and downs of these colors. I pay more attention to the new high-lows, the dark areas here, where turns are often likely to occur. Use those with your F dates. It's really great. And I also like seeing a series of reds or blues, letting me know that we are definitely looking for a trend change from here to here, and from here to here, and from here to way over here, and so forth. The ups and downs don't mean a lot, but when you have a whole streak, like here, I look at this, even though there's a blue day here, I look at this as a bearish, or I look at this as a trending time period here. So if prices were moving up to here, I would expect it to start moving down. But if prices were moving down to here, then I would look at this as a trend change for prices to start moving up for this time period here. This is a very, very, very valuable tool, and it makes me look good so many times. All right. I can use all the help I can get. Now, let me show you some other things here while we are looking at this chart here. Is if you'll notice the MACD and the DMS. Okay, these are all available, of course, by going up to the indicators here, and you can see there's the MACD and there is the DMS. All right, if you have it set with the MACD on top, whenever you see the MACD trading below the zero line like you see here, and you want it as oversold as possible, and then it starts to turn up, in other words, it breaks above the zero line, so you can see that the blue is going above the red. And at the same time, if this here was an overbought, like way up here, like this one is here, okay, so as this moves up, this starts to move down like it's doing right here. This would tell me that we are likely at the end of a bearish trend. Now, we had a minor situation like that where we can see that we've gone oversold, and we're crossing upwards here. And at the same time, this kind of made a mild little run up and now is curling down. This is saying, okay, we're at the end of this real minor bearish trend at the very least. But I would like to see these two close to each other. And if I can find a good example of that, let's see here. I'm going to go back a little ways. I may have to go to actually a different market. Well, wait a minute. We got something right here. You can see this is what it would look like somewhat. See how they got close to each other? Where this line is in the middle, where it separates the two indicators. You can see this is an oversold area, then crossing up. This is an overbought, and then starts crossing down, marks an end of this bear trend, which of course we see that happening right there. But as we move on, then you can see that things started to adjust down again, because now this is moving up, up, up again. And the inverse of this, by the way, and I'll show you this, you can see where the DMS is an overbought territory here, and you can see that this is an overbought territory here. Now we had some, you might say, some zigzagging going on here, some whipping around. But overall, as this starts to cross down, and this starts to cross down right here, right when those two are in agreement, that's usually denotes the end of a bull trend, which it did at this time. And I always note that I says that's the end of the trend, and I say for now, because you never know that after it's done that into that bull trend and it started to pull back, then you can see that it rallied again and made a little bit higher before it started to go down once again. So I always say that if anything, if on the day chart it's for now, it means if for at least the short term, could be longer, but I don't want to etch that in stone. I always want to be vigilant as to what could happen next. But that's just a really handy indicator to use. And another thing too that I want to point out here, let me get this all the way back here again, is that I like to use another indicator called the %R. It's a common indicator, but it's very useful for a market that's in a cyclic type situation, is that I really take note of these oversold and overbought areas here. And I look at how the market has behaved in the past to this indicator. So for example, normally what I like to see is if I see a market that's gone into the oversold here, and then I see it breaks up past that oversold line, I'm going to be in expectation that it's going to continue until it gets into the overbuy. I'm not going to believe that it's going to go halfway and then back down. Although it did it here, for example, when it broke up here, this is what I just do not expect to happen. I always expect this to happen. So I'm going to use this in conjunction to other indicators. So for example, here we can see that it broke out above, and then this correlates with it breaking above here, and we get in this little mild overbought, I guess, which it really isn't overbought. That's more overbought here. But it was moving up during where the red is above the blue, which means is during while it was moving down. That's how I know that this pertains to the bear, not the bull, because it was red on top of blue as opposed to blue on top of red. And when I see it just start to break down, and this is now on its way up and it's still below the zero here, these two lines here, I'm going to be expecting that we're at the end of this bear run for now, and then I'm going to be looking at this likely to want to go into the overbought area. Now it has not done so and it's curled down. I don't really care. I'm still going to expect it more likely to go into overbought before it comes back here, rather than it's going to be quitting here and going down here. That is always my expectation until something tells me that I'm wrong in that expectation. And I can assure you that rarely happens when I'm looking at this particular indicator in conjunction with these others. All right, now what else could I show you here? For example, let me go ahead and well, yeah, one more thing I'll share with you. Now, not all of you are going to have this, but those of you who have purchased, for example, a license to the F-Date suite of applications may also have access to a program called TOM. And all this is if you've ever heard of the delta phenomenon, and what I've done here is I've gone through all these markets and pretty much roughly, I would say, figured out where the likely delta points are. And I always adjust my file for this. I do it quite regularly every time I feel that it's off a little bit. And it's a good way to gauge things. So, for example, I'm going to select Australian dollar, and you'll notice that delta point 7 is around 510. Well, that's right here, and that worked out really well. You can see the 510s written here because this correlated with oversold, this correlated with an F date, this correlated with this coming out of here, it correlated with this moving to break up, and at the same time this to curl down, and it correlates with all kinds of other things. For example, I can come over here, you'll notice 510 shows right here, and this tells me, okay, see how that dark area right there? It says, hey, there's a good chance that we have a turn for that time period, and it happened one day early on 5-9. Hey, plus or minus 1 day works for me, and when it hit oversold, I'm ready to see this thing move up, and sure enough it did. Now bringing back Tom here, I might want to anticipate, well, how high might it go? Well, I noticed that the next one shown here for 8 is 530, and I marked it on my chart here. 530 is 8. And so with that, I put that on top here, anticipating that, you know, there's a good probability that we're looking at prices rising up until this time period. Now, so far, we're at 525, which is right here. So you've got 526, 529, 530. So it's several days out. I'd still like to possibly see something happen around this time period. If we see this actually pull back into this F date, which I anticipate there's a good strong possibility that it will, then I would expect prices to continue up into this time period to then make another swing top. By then, maybe we're also in this area right here for an overbought scenario and start to look for it to break down. And we can also see what's going to happen in here as well during that time. Now, as far as the seasonals, okay, you can see that the seasonal shows here we got a couple of possible turn days here, but notice that 530 is the last day before it goes through a streak of reds here with even a high probability of lower lows for 6-1, which tells me that having a correction around 530 for at least 2-3 days, and most definitely, well, I shouldn't say definitely, but high probability wise on 6-1. So this is my target for now, would be the 530 time period. So if I'm trading this, if I've been going long off this buy setup, and if you're gutsy, you would have gone off this. I'm not that gutsy. I like this. I don't like this, but you know that I've always been risk adverse. But you just plot your support line here and just make sure you have a way of getting out of the market in case the market does not do what you're expecting. Okay, so you have your safety line here, and you just move your stop up with it until you get real close to where you are expecting that turn, price, the indicators go into OB. You're in OB here, for example. Hey, no need to be using this anymore. You can start tightening it real up and try to capture as much as you can. Anyway, these are just some of the things I wanted to share with you. This is just from years and years and years of analyzing these charts. I come up with all these methods, secrets, tips, tricks, techniques, you got it. Anyway, we've gone into 26 minutes total for this video. So I want to thank you so much for watching. If you have any questions, please post them on the discussion forum within the forum. Don't email me directly, please, because my answers can get repeated to everybody rather than everyone getting the benefit of the question and the answer all at the same time. And time is valuable, especially in my office. Okay, thanks again, and I'll talk to you later in the next video.